Hey, the housing market just hit the brakes hard. In today's breakdown, I'm going to show you a significant slowdown in the market, and I have the fresh Redfin data to prove it. I'll show you home prices, inventory levels, and buyer demand, and what it means for your money in 2025. And stick around because the data I'm about to show you may, in fact, change your real estate plans for this year. Welcome. If you're new to my channel, my name is Jason Ferrier. I've been a realtor and investor just outside of Columbus, Ohio for the last 7 years. I'm thankful you're joining me today on this video. It's a big one, a lot of data, a lot of updates about the current housing market. Let's get started. Here's the plan for today. First, looking at the Redfin article and the latest data update. It'll cover mostly national numbers at first. Then we're going to look at metros, where the top metros are and bottom metros are according to the latest Redfin data. And then we're going to dive into some specific metros and look at their housing markets. And today I've got Columbus, Cincinnati, and Cleveland, Ohio, Seattle, Denver, Minneapolis, Minnesota, and Charlotte, North Carolina. You don't want to miss those because I dive into those metros in much more detail. And if you have a metro you want me to analyze on one of these videos, just put it in the comments below. I'll get to it on the next one. So here's the latest Redfin article that they publish every week. The link's in my description below. So this one is called "The Typical Home is Taking Nearly 2 Months to Sell." I'm not going to read the whole article, just a few highlights. There are more than 5 months of supply on the market, the most since early 2019. Homes are also taking longer to sell, largely because housing costs are so expensive. But for buyers who can afford it, there's a fair amount of homes to choose from. So the first statement, tell me what you think about this, comment below. And they're saying homes are sitting because housing costs are so expensive. Seems logical to me. What do you think? The typical U.S. home listing that went under contract sat on the market for 54 days before the seller accepted an offer. That's the longest span since March of 2020 and a week longer than this time last year. At this time in 2022, during the pandemic-driven home buying boom, the typical home was selling in 35 days. What you're going to see when I dive into some of these metros at the end, stay tuned for that, you're going to see some of these days on market absolutely explode. There were 5.2 months of supply on the market, the most since February 2019, and up from 4.9 months a year earlier. Months of supply is the length of time it would take for the existing supply of homes to be brought up at the market's current sales pace. A longer span means homes are sitting on the market longer and signals a buyer's market. Pending home sales were down 9.4% year over year, the biggest decline since September. Sales are slow because it's very expensive to buy a home. Buyers have been cautious because they've seen homes sitting on the market and they've heard interest rates and prices may drop. When the market isn't competitive, some buyers think they should wait for costs to go down, said Jordan Hammond, a Redfin premier agent in Raleigh, North Carolina. Now it's pretty clear that sellers aren't slashing asking prices and mortgage rates aren't plummeting, so mindsets are shifting. People are starting to believe that if they want or need to move and they can afford to do, they should do it. You're going to see in a minute, asking prices are actually climbing. They're not dropping overall in the U.S. when you look at the overall aggregate, but there are areas and pockets probably in your target neighborhoods where you may see some price discounts. I know I am. Tell me if you're seeing price discounts. Comment below. Let us all know where you live and if you're seeing those discounts. People, going back to the article, people are starting to believe that if they want or need to move and they can afford to do, they should do it. Don't believe people who say not to buy this year. Don't believe people to say you have to buy this year. Make that decision yourself. It's all an individual financial and lifestyle decision. Nobody else's to make but yours. All right, now they go into some leading indicators. These are like the top line indicators that talk about mortgage rate and buying demand. Daily average 30-year fixed mortgage rate, 7.06%. That's of January 29th. It's down from 7.26% 2 weeks earlier, but up from 6.95% a year earlier. I have some buyers that are shopping for homes right now. And yeah, they were quoted rates from mortgage lenders back 2-3 weeks ago, and they were like 7.25, 7.2. Now they're getting quoted. Actually, had somebody yesterday tell me they're getting a 6.99. Mortgage purchase applications, that's a sign of buying demand. That is down 7% year over year, basically unchanged from a week earlier. The fact is, folks, you have to apply for a mortgage unless you're paying cash for a home in order to buy a home. And because of, that's a good gauge of buying demand. Touring activity, that's how many people are actually out seeing homes. And I can tell you again from experience, I hold open houses every week, and people are just not out in droves seeing houses. Over the last few weeks, it's been absolutely like an ice box. So people haven't really been out looking at homes. Google searches for homes. How many people are actually typing in Google home for sale and looking at homes on Google? That is up 14% from a month earlier, but unchanged from a year earlier. Hey, a quick break from my data to remind you, please subscribe to the Housing Nerd. Comment below, like the video, and share it if you get any value and you think someone else would. That helps my channel a lot. I'm putting in the work. All you got to do, click a few buttons. Next is the key housing market data. They take the top 400 US metros and look at inventory levels, prices, and the overall sales pace of the market. This is the meat and potatoes, the housing market. And a lot of these indicators are what I use to look at local markets, and they're what you can use in your local market, even down to the subdivision level, if you can access that data to look at really the health of the housing market. Median sale price, 377,125, up 4.8% year over year. A lot of people thought this would be down, like this would have already crashed. They thought that in 2020, Nick Early. They thought it in 2021. They thought it in 22. They thought it in 23. They told us in 24. Now in 25, I'm sure they're singing the same tune. Hasn't crashed yet. Median price still up year over year. It is what it is, folks. I don't control the market. I'm just dealing with it, just like you. All right, median asking price, 407,225, up 5.2%. Remember earlier I said people aren't asking less for their house. That one agent, in a way, is correct that people aren't slashing their asking price overall in the market. The median asking price of the house in the middle of all the houses is up 5.2%. Insane. Median monthly mortgage payment, look at this, $2,753. What are you going to do? It's up 8% year over year, highest level since April, meaning it's 8% more expensive than it was this time last year. If you're waiting, it seems like things are getting more expensive. Comment below and tell me, are you waiting for home prices to drop? Are you waiting for interest rates to drop? Do you believe waiting to buy a home will actually give you a better deal? Or are you like, man, it seems like waiting is actually hurting me? Tell me what you think. Pending sales, 59,044 units, down 9.4%. Wait till you see the metros that I analyze at the end and what's going on with some of these pending sales numbers. Like they're down. In fact, I think all the ones we're going to look at today have lower pending sales than they did this time last year, means less buying demand. That's the biggest decline. Redfin says it right here since September 2023. New listings, 68,054. So the good news is if you're waiting for prices to go down is that new listings are outpacing pending sales. New listings are only up 2.2%. This isn't good. So new listings, while they're up higher than pending sales, they're actually not, they're not accelerating. So not a lot of people are listing their homes. So let's go to active listings. That's how many houses are actually on the market available to purchase. 889,202. Really not a lot. It's only up 11.3% year over year. That's the smallest increase in nearly a year. So not a ton of homes hitting the market. It's only up 2.2% with new listings. Active listings only up 11%. Not a lot of people want to sell their homes right now, folks. They just don't. They like their lower price. They like their lower rate. They're like, man, I got a $1,200, $1,300, $1,400 a month mortgage. I ain't going anywhere. Makes sense. I'm the same way. It would take like an act of Congress to get me to move and sell my current house. It just wouldn't make any sense for me financially. And most people are in that boat. Tell me if you like, no, I like my low rate. I like my house. I don't really need a bigger one right now. Not at that price. Definitely not at that rate. Comment. Tell me what you think. But other fact, back during the GFC 2008, I just did a video on that. It's in my playlist. Check it out. There were 4 million active listings. 4 million. That's right. You heard me right. 4 million. Now we have 889,000. Why do you think the housing market's expensive? Duh. All right. Now let's go to median days on market. Now, median days on market, that's how long a house typically takes to go into contract. If you look at the one in the middle, 54 days. That's a lot longer than it was last year. It's actually up 7 days. So last year, it was what? 47 days. Now it's 54 days, a lot longer than this time last year, the highest amount in nearly 5 years. Share of homes sold above list price, 21%. That's down from 23%. This keeps dropping. You'll see that in the graphs in a second. But man, like people are still 21% of sales are still coming in. The final sale price is actually higher than that final list price. And that tells me that people in some situations are still paying over asking when the house is in a great neighborhood. Maybe it's probably priced very well, because homes that aren't priced right now are not moving. So median sale price, this is the graph they put out. You can see this green line right here is the median sale price for 2025. It's starting higher than 2024. We know that, about $377,000. It's not crashing, at least not yet. It ended last year higher than the year before. 2023 ended higher than 2022. So every year it's been higher. You can clearly see that. Again, a lot of people keep saying, watch this number, it's going to be lower at the end of the year. They keep getting it wrong. There's just not the inventory out there to crash the market. Got no inventory, got no crash. Here's median asking price, how much people are asking for homes at the house in the middle. That's medians, not average. Up 5.2%. It's going straight up. So this isn't falling by any means at any rapid rate. Next, home buyer housing payments. You could see basically straight up at $2,753. Again, costs more now to buy a home than it did in 2024, 2023, or 2022, unfortunately. Pending sales, how often sales are going into contract. This is down 9.4% year over year. An indicator that buying demand is definitely low, and it could be an opportunity to get a deal because there's less competition out there. So pending sales are low, but active inventory is low as well. If you had a lot more inventory and this type of buying demand, then prices would definitely probably go down. New listings of homes for sale, that's how many homes are hitting the market. You can see it's only up 2.2% year over year. Need a lot more inventory than that, folks, to crash the market. And again, this is where you're going to see the distress. So far, overall, not seeing that forced selling, distressed sellers, but not many. If there were a lot of people who were dying from the housing market, like I can't afford my payment, I'm bleeding, I'm hemorrhaging cash. If a lot of Airbnb investors were actually out there being forced sellers, don't you think you'd see it in these numbers? We don't. Active listings of homes for sale, up a whopping 11%. I'm being facetious. That's really not that much at all. Again, need a lot more inventory to crash the market. I'll keep saying that over and over again. We're going to go to 26% of pending sales under contract within 2 weeks. So that's a 4-year low, means that homes are definitely sitting longer on the market. You'll see that here. Homes sold in a median of 54 days. Look at that, a 4-year high. So back in 2022, homes were selling about, 33 days on average, or for the median, it was selling in about 33 days. Now that number, 54 days, homes are sitting longer. A lot of times because they're priced incorrectly. If you're a seller, listen up, got to price that home correctly out of the gate. If you don't, you're doomed, because there's a lot of sellers that still have a fantasy that I can sell my home for more than my neighbor's home. Everybody thinks their home's better than their neighbor's home, even if it's not. It's just how people are. There's that 21% of homes selling above final list price. Now, we're going to go back up to the metros real quick of the biggest winners and losers. So this part, they take the top 50 most populous U.S. metros, and they look at where the hottest and coldest markets are with pricing and inventory levels and buying activity. So median sale price, where did that increase the most? Pittsburgh, PA, Milwaukee, Fort Lauderdale, Newark, New Jersey, Cincinnati. Isn't that interesting? Fort Lauderdale, Florida, the heart of the crash, right? This massive crash of Florida that we're going to see. Median sale price right now of 14% year over year. That's a lot. Nationally, we're only up, 5%? Nuts. Metros with the biggest year-over-year decreases: San Fran, Austin, Tampa. Median sale price declined in only 3 metros. Only 3 out of the top 50. It means 47 of the top 50 largest markets in the U.S. have a higher median sale price than they did this time last year. Comment below. Tell me what you think. That's crazy. Pending sales, where homes are going into contract more than last year. You got 2 metros out of 50. It means 48 metros had lower pending sales than last year. Portland, Oregon, and Milwaukee, Wisconsin take the list in the top 2 spots. Everything else is down. Look at Miami, down 24%. Detroit down 24%. Atlanta 22%. San Diego 20%. And Houston 20%. These markets basically are seeing a lot slower buying demand than they did this time last year. New listings. Look at this. San Jose, Phoenix, Seattle, Oakland, and Sacramento lead the pack in new listing activity. Now we're going to dive into the metros that I mentioned at the beginning. We're going to start with Columbus, Ohio, because that's where I live, just outside of Cbus. If you have a metro you want me to analyze, put it in the comments below. I'm happy to do it. So we look at, this is the data center. The link's in my description below, and you can go over here to the right and actually click on various metros at the metro or county level to get a sense of what's happening in your area. So I got Columbus on here, and we're going to look at new listings, active listings. We're going to look at pending sales, days on market, and median sale price. So let's get going. A lot of stuff to go through. New listings in Columbus, Ohio, up 0.2% year over year. You can see it right here. That's not fantastic. Basically means not a ton of houses hitting the market, really, just like nationally. We're in that same boat. All right, so let's go to active listings now. Active listings for Columbus, Ohio. We are 12.15% up year over year. Certainly more active listings, but not a ton. Inventory I wouldn't call is exploding. It's certainly building in Central Ohio, but it's nothing like you saw back in the GFC or something. And by the way, in Columbus, we do not have a lot of new construction. I'm shocked at the low level of new construction in Columbus. It's probably keeping prices higher than they would be if we had a lot of new builds. Okay, so that's active listings. Next is pending sales, down 8.4% year over year in Columbus, Ohio. Again, buying demand is definitely lower. It's a 4-year low in Columbus when it comes to pending sales. Not a lot of homes going into contract, folks. Just not a lot of buyer activity. Some of that could be the weather, but some of it could just be insane home prices, insane interest rates. All right, now we're doing median days on market. You can see, look at this in Columbus, up 9.7 days year over year. I told you some of these days on market were insane. 57.7 days. Like, it's gone completely parabolic. It's actually 4-year high right now for how long homes are sitting on the market, according to this Redfin data. So if you're a seller in Columbus, you better plan for your home to take a little longer to sell than you probably expect, and make sure whatever you do, price it right. Finally, we're doing median sale price. So median sale price in Columbus hasn't crashed. $322,000. That's up 5% year over year, just like it's doing nationally. Last year, we peaked at about 353 in the summer in Columbus. We ended the year in Columbus at $328,000. Okay, that's Columbus. Next is Cleveland, Ohio. Let's start with new listings in Cleveland. What do we got here? New listings in Cleveland, we are down 8.2% year over year. Insane, right? Think about that. Nationally up 2.2% in new listings, which is pathetic. But in Cleveland, we're down 8.2%. Nuts. Now let's look at active listings. I don't think this is going to look good either. No, it doesn't. Down 4.3% in active listings. So there's 4% less homes for sale than there was this time last year in Cleveland. When I don't think it could get any worse with inventory in Cleveland, it certainly does. All right, now let's do pending sales in Cleveland. That's probably down, I'm guessing. Pending sales down 6.9%. Just less activity, less buyers, less sellers. That spells disaster for home prices. Let's look at median days on market in Cleveland. Median days on market's right in the middle there. It's actually, median days on market's actually down 0.5 year over year. So it's not like Columbus where it's exploding in days on market. It's actually about the same as it was last year. So how is median sale price now? It's headed down since the beginning of the year, but it's still up 10% year over year. It's going to be hard to have price discovery and crashes when there's less new listings and less active listings than last year. Cleveland's just ridiculous as far as inventory levels. It's maybe one of the worst in the country that I see. All right, Cincinnati, on the other hand, is different. Cincinnati last year had a lot of inventory. So let's check out Cincinnati and see what we get. Cincinnati, Ohio. Wow. Right now, Cincinnati is down 8% in new listings. So I was wrong on that. Like Cleveland, not a lot of new listings. Again, it's been really cold here, maybe maybe that's driving some of sellers not to put their homes on the market, or it could just be the insane prices and really nowhere to move to get a better deal. That's new listings. So active listings for Cincinnati, Ohio, there's 38% more homes for sale in Cincinnati versus last year. Inventory there has been pretty healthy compared to last year, but maybe not historically great. I have to look at those numbers, but man, it's definitely up, but new listings are down now. So Maybe this is bad inventory that people don't want, homes that need a ton of work or are overpriced homes. I don't know if you live in Cincinnati, let me know. I'd love to understand what's happening. Now let's do pending sales in Cincinnati. 4-year low, down 7%. Days on market in Cincinnati. Look at this outlier here, up 28 days. You want to talk about sitting on the market longer? 28 days compared to last year, homes are sitting on the market in Cincinnati, nasty, natty, Ohio. Ridiculous. Just like 1 year, hey, my home's going to sell in 28 days. Next year, it's going to sell in 52 days. All right, median sale price in Cincinnati. Look at this, $281,000, up 12% year over year. So all this low buying demand and higher inventory in Cincinnati and longer days on market has not translated into a meaningful sales price change yet. Will it? Wait and find out. I'll be here the whole year to show you the data. All right, let's jump out to San Diego. I was actually born in San Diego. Let's do that. Let's do new listings in San Diego, California. We looked at Ohio. Let's see what the difference is with California and how it's doing. 5.1% up year over year in new listings. So they actually have some more new listings. National numbers, 2.2% up. San Diego, 5.5. Active listings, where are they? Look at that, up 17% year over year in San Diego. So you do have some more active listings to go out and find a home. I imagine the market's still expensive there, but maybe this is some light at the end of the tunnel. Pending sales down 20%. Yikes. Buying demand there has definitely been crushed. All right, median days on market, up 12 days in San Diego. So like the other areas, median days on market is exploding. Again, this is a really interesting stat because it doesn't show you that there's just more inventory. It shows you that the current inventory that's there is sitting. So in San Diego, we do have more active listings. That's good. We have more new listings. That's good. But median days on market is also going up. So all three of those would tell me that at some point, and by the way, pending sales are down. So at some point, you would think that would translate into sale price. Let's see what's going on. It's leveling off in San Diego, but it's $885,000. What's that? Almost, just call it for rough math, 4 times Cleveland. Yikes. But year over year, that's up 7% still. Hasn't crashed yet. It'll be interesting to see if San Diego can hit the peak it did last year. This was an all-time high in San Diego, $944,000, up 10% back in May of 2024. Next is Phoenix. Phoenix is like the one everybody likes to talk about for the massive crashes. Let's find out what's happening in Phoenix, Arizona. New listings, look at that, up 19%. This would tell me there could be some distress building in Phoenix because, shoot, you're up 19% year over year. That's a lot more new listings compared to last year. Active listings in Phoenix, look at that, up 23%. So far we got 2 indicators that inventory is definitely climbing and there may be some distressed listings and more motivated sellers in a place like Phoenix. All right, let's look at pending sales. If that's down, okay, so that's down 9.7%. So far, we've got the perfect recipe, right? If you want to crash in prices or a decline or a correction in prices in Phoenix, this is your recipe for that. You've got everything you need. Pending sales low, new listings higher, active listings higher. All right, let's look at how long homes are sitting on the market in Phoenix. Okay, so they're up 10 days year over year in Phoenix. So it takes 10 days longer to 66 days. All right, now let's look at median sale price in Phoenix. Look at this, though. Still hasn't crashed yet. $465,000 in Phoenix, up 4% year over year. Be interesting to see where it ends. Now, last year, look at the 2024 line. It was actually under 2022 for most of the year until the end. And then it started going up because in 2022, at the end of the year, we had price declines. But then look at 2024, it ended up 5% at $467,000. That actually looks like, no, back in 2022 was an all-time high at $488,000, up 21% at that time. Crazy, right? Then it dropped off a cliff. But right now it's starting higher than any year prior, $465,000. We'll see if that price changes. It'll be interesting to see. Next is Seattle, Washington. Let's go out to Seattle. New listings in Seattle. Where are we? Right here, up 15.2%. Again, a lot more new listings than last year. That's good. They need active inventory, I'd imagine. How's that doing? Active inventory is up 25% year over year in Seattle. And then let's do pending sales. Hard to see there, but pending sales down 5.3% in Seattle, Washington. Now we'll do days on market, how long homes are sitting on the market. What do we got here? Median days on market in Seattle is only up 0.1 days, basically flat from last year. It takes about 30 days to sell a home in Seattle. Now let's do median sale price to round out the Seattle market. What do we got? Look at that, $781,000, up 5% year over year. It's going to have to climb significantly in the next coming months in order for Seattle not to have a price decline compared to last year. But at the end of 2024, it ended up 6% compared to 23 to $794,000. It looks like their peak in Seattle was 864 grand, up 9. That was back in June of last year. Next on the list is Denver, Colorado. Denver, Colorado. New listings in Denver, Colorado. Looks like we're up 8.7%. So definitely some more new listings hitting the market. Look at active listings in Denver, up 24% or 25% if you're rounding up compared to last year. So definitely more homes for sale available to buyers. If you're in Denver or you know the Denver market, let me know. Comments below. I'd love to know if you know what you're seeing in Denver. All right. Next would be pending sales in Denver. How are they doing? Pending sales, look at that, down 16% year over year. Pending sales nationally down 9%. Pending sales in Denver, Colorado down 16%. Yikes. Whoops. Yeah, down. Let me just make sure I got that right. Yep, down 16%. Okay. Now, how long are homes sitting on the market? Wow, look at this. In Denver, Colorado, 10 days more than last year. Nationally, we're up 7 days. This is 10 days more in Denver. The median on market, 51 days. So last year, homes were going into contract about 40 days. This year, 50 days. Same, scenario with a lot of these other metros taking longer to sell homes. You can see that in the national number. Okay. Median sale price in Denver. What's up with that? It's starting to go up again, $573,000. It's only up 1%. Just like when we looked at Phoenix, we're going to have to see a massive increase in median sale price to beat last year, to beat 2022. Last year, you actually ended up 4% higher than 2023, and that was 573 grand. Your peak was actually in 2022 at $617,000 back in April of 22. Okay, next metro is Minneapolis, Minnesota. New listings down 7%. Look at the different markets. You've got Phoenix and San Diego and Denver where new listings are actually up. You've got a place like Minnesota down 7% in new listings. How are active listings, I wonder? Wow, look at active listings in Minneapolis, down 1.75%. Active listings, you have less than you did last year. Everywhere else, you got more, a lot more usually. Minneapolis down 15% in pending sales. If it wasn't for the fact that you had new listings and active listings lower than last year, you'd probably see excess inventory because pending sales are so bad. Median days on market. How long is it taking to sell a home? What is taking longer? 3 days longer. It's not 10 days, not 20 days like it is in some other areas, but it is a little longer at 3 days. Median sale price in Minneapolis, where are we now? Look at this, $373,000 in Minneapolis, 5% up year over year. Man, the peak last year was in June, $395,000. They ended last year at 371 grand, up 4%. So last year did not go underneath the previous year at all. Great example of a market where not a lot of inventory, relatively affordable home prices when you compare them to the rest of the US. Remember, median's 377. This is what, 373? More expensive than Columbus, Cleveland, or Cincinnati, but not insanely expensive like Denver or Seattle or San Diego. The last metro for you is Charlotte, North Carolina. Now, they don't have Charlotte listed as a actual metro in the Redfin data. So instead, I'm going to go to the county level, and you can do that with this data. So I'm going to go to Mecklenburg County, North Carolina. That's where Charlotte is. And we're going to start by looking at new listings in the county. Down 2.7%, so less new listings than last year. Let's do active listings in Charlotte or Mecklenburg County. 20% more than last year. So more active inventory, just not as many new listings. So new listings aren't exploding there. Again, that's where that distress is, folks. You see a lot of new listings like we did in Phoenix. I'd say maybe some distress going on. Less new listings. It's if there's less people listing their homes, they must not need to sell them. So active listings up 20%. Okay. So they do have a little more inventory now. What's coming off the market? How long are pending? What are pending sales doing? Down 14%. So less buying demand, 4-year low in Charlotte, North Carolina. Let's look at median days on market. How long are homes sitting on the market? It's headed down over the last week, but it's still up 7 days to 60 days. So it's now 7 days longer to sell a home in this county where Charlotte is versus last year. All right, median sale price in Charlotte, $431,000. That's up 5%. Last year, it ended the year higher than any other year, $433,000 in Charlotte, up 7%. And it peaked in Charlotte in June of last year at 473 grand. Okay, so what do you do with all this information as a buyer, seller, investor, even realtor? I would make sure you're patient if you're a buyer, even if you're a seller, and certainly if you're an investor. The word is patient. Gone are the days where homes are getting on the market that need 100 grand in work and they're flying off the shelf in one day overall. Mostly homes are sitting longer. We know that. So you got to be patient as a buyer because you've got to keep hunting and make disrespectful offers. If you don't have to buy a home right now, go out and hunt and continue to make offers that make sense for you, not necessarily the seller, because you have to buy based on your financial situation, not somebody else's. If you're a seller, make sure you price that home right and realize it could take longer than you expect or have been conditioned to over the last couple of years to actually sell a home. You may not get 20 offers. You may get a couple offers. You may get a couple offers under asking price, but realize that the market has shifted. You can clearly see it from the data. Don't put your head in the sand and think the market's just like it was before. I'm going to price my home way high. Wrong. Don't do it. If you're an investor, the beautiful thing about us investors is that it doesn't really matter what's happening in the market. You keep playing the same tune, right? You go find opportunities, usually off market, even on market, and you make disrespectful offers, find something that makes sense, and then you pull the trigger. If it doesn't make sense, you don't pull a trigger, but it's all about the numbers. And as a realtor, whatever you don't tell your clients that the market's just like it was, it's super hot, buy now or perish. That's foolish, lazy, and pathetic. That is what cheesy realtors do. Don't be a cheesy realtor. Instead, pull the data for the subdivision your client wants to buy in, help them analyze it and understand what's really happening there and be honest with them. Maybe it is a buyer's market. Maybe it's not a hot market. Maybe it's not the time to marry the house and date the rate, which, by the way, is the worst advice you could get. These home prices are one part of the equation. Interest rates are the other part of the equation. So you want to know what the experts think will happen to mortgage rates in 2025? Check out this video right here.